All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar, and I want to welcome you all back, and happy FOMC day for those of you that are just tuning in. So we're going to go through our morning analysis with all of our major currencies, and let's go ahead and get started with that, because we obviously I'm going to have a lot of questions today, and some questions that have come in already that I want to make sure I address. So so we'll get through the analysis portion first and foremost. Okay, so here's the euro dollar. Take a step back for a moment and kind of realize where we're at with the euro. Okay, so the euro, obviously we are attempting to start our bear flag pattern, our big weekly bear flag pattern that we've been anticipating for a long time. This has been a work in progress. Slowly but surely working its way lower. We hit the upper end of it when we tagged at 117 a couple months back, and we're finally breaking below 111, which, if you look at, the daily trend line support, we finally broke through that at the end of last week. The ECB really put the euro dollar on its knees because, any which way you slice it, the ECB is going to be expanding quantitative easing, as we've been saying for the last 6 months, and maybe even more, thanks to Kevin Ferry. No central bank has ever done quantitative easing and not extended its initial amount that it thought it would. So the European Central Bank looks to be falling in line with expectations of every other central bank that has done quantitative easing. The difference between the ECB and the Fed is the ECB is a good several years behind the Fed as far as doing quantitative easing. So that divergence of monetary policy should keep the euro dollar moving lower. So like I said, even, it's all said and done, the ECB is still doing more quantitative easing, and the Fed is looking to raise rates at some point, whether it's this month, whether it's today, whether it's December, whether it's beginning of next year. Okay, that should keep the euro going lower over time. Question is, do we start that journey now? And I think that has a lot to do with what the Fed says today. So we've broken through this downtrend line. So today, I'd like to say that resistance is at 111, because you look at this previous support that's contained us this far, and that's 110.85. But really, you can let it even spike up towards 111. But I'm going to have to give you even a price more than that. Okay, and the reason why reason why I say that is because we can get some volatility ahead of the Fed. We can. So let's draw from the last move. Okay. Here's the low. Okay. So you can see the 38% retracement comes up at 111.40. Okay. That's the 38% retracement. So as far as I'm concerned, resistance is at 111. 111.40. Okay. Bias right now, it is bearish. We are coming out of our range environment that we've been in for so long. I mean, for how many last 4 or 5 months we've had this. Okay, we're just now starting to push out of that range, and we have a bearish trend developing. Now, yes, we're bouncing into resistance, but as you can see, we've got a lot of obstacles to overcome here in the euro. These are all sell zones, if you will, this whole area that the euro is facing. Okay, we're going to have a very dovish statement out of the FOMC today, and expectations are going to have to be firmly pushed out to next year. And that could very easily be the case. I mean, if you think about the last FOMC statement, it was dovish, and that's what really pushed us out to 2016. So confirming that today will weaken the dollar and push the euro back above that 111.40, in my opinion. Okay. But these are going to be near-term resistance levels that I think we're going to have to deal with today. All right. Now support is obviously 110. That's it. No if and or buts about it, because 110 is, I'll put 3 asterisks next to 110. That's how major that support is. Okay. Why is that so major? Why? The reason why that's so major, guys, is because 110, a break above 110, puts the dollar index in breakout territory. Okay. Yes, Patrick H says it's a big round number. Yeah, it's a big round number, but it's what will put the dollar index also in breakout territory if we break out above 110. So 110 is a big deal, guys. Period. End of story. If the euro relinquishes 110, I'm going to give you a very big warning. Okay. If the euro dollar breaks 110, do not be short the dollar. Maybe against the yen, the yen's always on its own program, so the yen never really factors into this. But if the euro dollar breaks 110, don't be long the pound dollar, don't be long the Aussie dollar, don't be long the Kiwi dollar, I know you go, well, the RBNZ, yeah, don't be long the Kiwi dollar, don't be short the dollar Swiss, don't be short the dollar Canadian, don't be short the dollar Swedish krona. If the euro dollar relinquishes 110, that means the dollar index is in breakout territory. Okay, is everybody clear on that? Like by the end of the day, if it's 6 o'clock New York time and the day's done and the euro's trading below 110, don't go home short the dollar. That would be like financial suicide, in my opinion. Are we all clear? Are we clear on that? I just want to make sure that that's like everybody understands that. I mean, you can if you want to. It's your own money. I'm saying that it will be a massive breakout. We will be in breakout territory. Okay? All right. So just make sure we're all clear on that. Okay. Let's go into the pound. All right. So the pound dollar. Okay, the pound dollar, we gave up 153. We finally broke 153 yesterday. We closed below this trend line, and you can see the pound looks bearish. 152.60 is support. That's obviously the 618 of this entire move. And the cable don't look good. I mean, we had this line drawn up here. Remember last week? Remember that? Couldn't close above the 155 level. I mean, the bottom fell out. False breakouts above the high. The wicks were up, couldn't get us to close above those levels, and then boop. Okay, 152.60. That's first level of support. Okay, but 152. 152.60. Okay, those both are big levels of support because your 152.60 is a 618. The 786, here, let me grab this. We don't need that. There, the 152 is also a spike low, horizontal low, horizontal support, and a 786 retracement. Okay, both supports. It all depends on the euro, obviously. Okay, so oh, by the way, Daryl, while I'm thinking about this, I read your question. Give me your reasoning, because I don't see it that way. I'll read your question after we do all this morning analysis, but give me your reasoning, because like I said, I don't see your point of view. Okay, I don't necessarily agree with you. I'm not saying that you're right or wrong. I'm just saying I don't agree. I'd like to hear why. Your whys. Okay. Anyway, all right. Going back to the cable. So there's the support. So where's resistance today? I mean, I shouldn't have taken off that red line, but resistance today, I mean, I'd like to say resistance is right here at 153.20. I mean, but we could very easily be right back above that by, like, we can be back above that by the end of the morning edge. You know, we could pop right back above that. So, okay. I'm gonna just say this, and it's not even really critical resistance. It's just minor resistance. But if we get above 153.50, 153.60, that would be pretty bullish for the cable, because then we'd stop making lower, you know, lower highs. We'd be making higher highs. I just don't think it's really possible to make it all the way up here ahead of the FOMC. But that should turn the ship. That should turn the ship. Okay. The pound is now turning bearish. Okay. Actually, we're still more or less in a range, but yeah, actually. You know what? After today, if the euro dollar is still weak, then the pound's going to be probably heading into a bearish trend too. All right, let's go over to the Kiwi. I'm sorry, Swissy. So the Swissy pulled back. Somebody asked me yesterday at lunch money. I think it was Fernando. He asked me yesterday. He goes, Blake. He goes, you know, this is yesterday at lunch money. He goes, so we're at 98.70. Should I be buying here? And I'm like, Fernando, do you really think you should be buying there at 98.70? I'm like, why don't you try 98.25 or so? If it drops back to 98.25. Overnight, it went to 98.28. So now, don't worry about that. Well, it's already pulled back. I'm hanging on my dollar Swiss. If you guys don't know the reason why, let's just reiterate. The dollar Swiss is broken above this long-standing, multi-year, multi-decade trend line, that yellow one. Okay, but really it's all of 2015. We're breaking above that. I got asked in our chat room yesterday, Lynette asked, or Patricia asked, Blake, when is the dollar Swiss really breaking out? I said, well, really it's above parity. It really is above parity before it's broken out. When the dollar Swiss, when or if the dollar Swiss breaks above parity, I will be whistling Dixie. I'll whistle Dixie. So I just get to throw another song into the mix. But we do have some near-term resistance, obviously, at 97 cents, okay, or 99 cents. 99 cents will be resistance today. Support will be back. Imagine this trend line getting retested, 97.75, okay, 97.75. So support, 97.75, resistance, 0.9900. We are in a bullish trend now that we're breaking that downtrend line, okay? Okay, let's go into the yen. So the dollar yen, now don't forget guys, the BOJ meets tomorrow night, Friday morning, okay? This pullback that you've seen in the dollar yen from this resistance, okay? This pullback that you've seen from the dollar yen from resistance is primarily due to expectations shifting that the BOJ won't act this week, where, you know, people have been expecting the BOJ to utilize more quantitative easing. You know, the BOJ has been signaling that they don't need to do any more quantitative easing, and Abe's officials in their office said, you know, it really hurts purchasing power of the Japanese if we continue to do quantitative easing, blah, blah, blah. So, you know, I think a lot of people are starting to say, okay, well, maybe the BOJ is not going to act. All right, so the dollar yen obviously has come off resistance, and that comes in at 121.50. Okay, now we will have to mark down that number. Here's the reason why. let's say, okay, I'll say it again. There's less than a 10% chance that the Fed raises rates today, in my opinion. But the market sees it as less than a 5% chance. I would say it's probably less than a 10% chance, and if you missed the reason why, it's because I don't think December is really in play. I don't think there's enough market participants around where the Fed wants to make a move in too thin of liquidity environment. That's why I think that the window, if it's going to be open, it's going to be open today. However, the chances of that is so small that I just think we're going to just end up being pushed off until the beginning of next year. However, let's say the Fed does the unthinkable and they do raise rates today. It's unthinkable, right? I mean, you talk to anybody in the market, they would be like, no freaking way, never, ever gonna happen, right? Let's say they do the unthinkable today. Will the dollar yen rally? Yes, it will. The shock of a Fed hike today will shoot the dollar up against everything. I would say at least 100 pips against everything initially. I mean, you won't even be able to you won't even be able to blink, and everything will move 100 pips against you. Or the dollar will move, or every currency pair will move up 100 pips, favoring the dollar immediately. But the reaction in the stock market would be lower. The stock market would get creamed. We would see the Dow down 200 points within 10 minutes. Okay, so if the dollar yen spiked up to 121.50, you have to, well, you don't have to. I would think it'd be a good short. I might actually short it up there, okay? Because the risk aversion would play in and we would see the dollar yen sell off. So I will write down 121.50 today. This support down here will be support because, and it's going to be a kind of a wide range today, but look, any move down to 119, we can say all the way even down to 119. I would say 119.20, 21.50, 119. I mean, I know it's a really wide range, but here, if you can take a picture of this, this is how I'd choose to trade the dollar yen. I don't own any dollar yen, anything like that. Okay, that's how I would choose to trade the dollar yen. Because let's say the Fed is pretty dovish in its statement, the dollar yen drops, right? Because the dollar gets hit. Dollar yen drops to 119 and change. I would get long down there because the stock market's going to be creaming higher. If the Fed's like, if we go, oh God, the Fed's not going to raise rates until 2017 now. I'm just being sarcastic, but let's say they say the Fed's not going to. We start saying, oh, the Fed's not going to raise rates this year. They're not going to raise rates until at least the beginning of next year. Stock market's going to move higher. The dollar is going to get hit, but the dollar yen, you probably want to be a buyer down here, as the yen pairs will probably end up going higher. Okay. All right. So anyway, 119.20, 121.50. It's a really wide range, but I think you have to play it as such. 119.20, 121.50, and we are range bound. Okay. All right, let's go into the Canadian. The Canadian, so the analysis we've had, it worked out to a T this week. Dollar Canadian, inverted head and shoulder pattern, shoulder, head, shoulder, neckline, completion. We came within 10 pips of that. As we started approaching the 133 level, and the head and shoulder completion, traders started taking profits. I mean, it was perfect. Okay. Now, where to from here? That's the question. Where to from here? Well, let's keep all this in mind. This is channel. This is channel. Me see channel. This channel. Everybody see channel. This is channel. I don't know why I spoke like that earlier, but apparently that's what happens when you're doing analysis at 4:50 in the morning. Me speak no English. We all see big channel in dollar Canadian. Okay, so anyway, dollar Canadian, I would say that we would find support down. Let me get rid of that. We'll find support down here, which will be, let's say, roughly by the time we get there, 131.60. Okay, 131.70, somewhere around there. Oh, we could draw a quick fib and see where that might be, but 131.80, 131.55. By the time we get down there, I mean, it depends, because you have to imagine this is an hourly, so fast forward us like 3 or 4 hours from now, we're over here. So 131.80, okay, roughly 131.80. And then resistance right now is obviously this trend high, because if we take that out at 132.80, it's we're off to the races again. Okay. Because we can, if like, let's say the dollar is breaking out. I mean, we take out the upper end of this range, then we're shooting higher. We're going to test that pretty quick. So resistance, I'll say resistance comes in at 133 for now, just roughly. Not great resistance, but the Canadian's been very technical and very obedient. It's been very obedient this week, so it's acted really well technically. So we are still in a big range, even though we're in a very strong upward trend due to that, this yellow trend line right here that we talked about when we picked it up down there, remember, last week or a week and a half ago, 2 weeks ago. It's been very technical, very obedient trading wise. Okay, it's just now it gets a little tricky once you get up here. Obviously, if the euro dollar breaks through 110, I mean the Fed hiking rates probably will have a negative effect on commodities. We could see the U.S. dollar Canadian rip right through the resistance eventually, over the next couple of days. Okay, let's talk about the Kiwi really quick before we take our next break, and I need to get some more coffee. So the Kiwi, hello? I can hear somebody's mic. Is that Kip? Good morning, Kip. Sounds like that was Kip. All right, so here's the Kiwi, and so the Kiwi dollar broke through support yesterday. Now, if you, let's delete this, okay. Okay, right now, the Kiwi could find some support soon. Now, what we have here is we have a failure to communicate. We have a possible Gartley pattern would be right there, okay. 786 retracement comes in 66.80. 127% extension comes down here, and that would be an 88% retracement, so that would come in. That support will come in right here at 66.50. So that's going to be support today for the Kiwi dollar. And matter of fact, while we're doing that, shabam. Okay, that's going to be pretty key support. If you're long the Kiwi, you do not want to see that level break. 66.50. Now also keep in mind that the RBNZ is later today. That is major support. Okay, because you can get a double whammy out of the Kiwi either direction. You could have the Fed sound dovish and the RBNZ sound hawkish. You can have the Kiwi dollar that will be trading. You'll have the Kiwi dollar trading up at 69 cents again. You have a hawkish Fed. A hawkish Fed and a dovish RBNZ will be trading down at 64 cents again. So things can get really crazy quickly for the Kiwi today with the double whammy central bank activity. Okay. Now, as far as resistance goes in the Kiwi dollar, here, let's take that Gartley that we were drawing. Okay. That resistance will come back into this if we bounce, any bounce back to 77, I'm sorry, 67.80 will be resistance today. We are in a range here. Okay, when I get back, we're going to do the Aussie dollar, the dollar index. We're going to do the peso, Swedish krona, Norwegian krona. Get those out of the way. Don't go anywhere. I'll be back in a few moments. Thanks everybody for being here. Happy FOMC day. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So let's go over to the Aussie dollar. Let's wrap up our analysis of these majors, please. Okay, so here's the Aussie. Now the Aussie. So you know, if you're you know, like last night on the FX wrap, here's the FX wrap right here. The Aussie dollar found support at 72, but below here targets the 71.25 fib extension. That was last night, before Aussie CPI. Now the reason why, whoa, what just hit new lows? Wow, the cable, so weak. Wow. Now the reason why is that was channel low. This is yesterday, right? So we had channel support down here. We also had 161% extension. We hit it. We broke a little below it, but you know, for the most part, I mean, we're sitting there right now. Okay. Now, I've had you guys asking me, is the Aussie dollar in a flag pattern? What's wrong with the flag pattern now? What's your answer? Yeah, the flag is greater than 50% of the distance of the pole, okay? So, it's not a flag, right? Not a flag. I mean, I guess it could still work as a flag, but you know, you can't measure it as a flag anymore. You can't measure the distance out of the move as the same distance as the pole. It just doesn't work. Chances are it's not going to work anyway. Probabilities have gone down dramatically now. We are at a 618 retracement though, okay, and 161% extension of that last move. So 71 cents of support. You know, obviously 71 cents is going to be pretty important support today. Okay, resistance. You have to think about all the people that have been playing long the Aussie dollar. They're long and they're going, oh shoot, you know, yeah, I've been playing this flag pattern. I thought it was a flag or a pennant, you know, here, and of course, you know, you're long and you just don't want to give up on it. So, you know, you're long and it's not working out for you, but it's okay. You still got that chance. So you're saying I got a chance, right? So now where does anybody who's long, where do they want out, right? Well, remember, we had that pennant all week, right? So now if we can get back to 72 cents, how happy will people that are long be wanting out? Be like, oh my God, thank God we got out of that. You know what I mean? So if we get up to 72 cents, you're going to get people saying, thank you, I'm out, I'm done, I'm finito, I'm out of here. Okay, dollar index. Okay, let's go over to a 4-hour dollar index. Same deal, 97.30, support still holding, 96.65. Nothing's changed. 96.65, 97.30. We're in a range for now, but if we take out those highs, oops, I should put asterisk, asterisk, okay? Because if we take out, oops, wrong chart. If we take out those highs above 97.30, then we're in breakout territory, right? Okay. So that's how important that level resistance is. If you guys are newer to the morning edge, like you're listening to my analysis and you're like, oh wow, okay, this is, we do this every day. I think we've done a T chart or a bias chart every day for the last 9-10 years, maybe. Back when Brad Coleman and I used to broadcast together. I used to actually do a T chart. I used to draw it. I'm not exaggerating. I drew it on a piece of paper, and then I would flash it to the camera, and then the camera would zoom in on the piece of paper, and we started doing it actually, in this format. Kevin says, I remember your T-charts with Brad. Yeah, you remember those? They're pretty cool. Cable's breaking down. Still have support coming in at 152.60. So, all right. Anyway, let's go over to the peso. What I wanted to say about this is when we do these key levels of support and resistance, remember that it's not areas to buy or sell. You don't look at that support level and say, I'm buying here or I'm selling here. A support or resistance level is an inflection point area based on some sort of technical, whatever we found. So whether it was trendline support, fib support, horizontal support or resistance, whatever, that's what and those levels, the reason why you are aware of them, because that's where they could possibly, a currency pair could bounce or reverse at. When I put an asterisk next to a support or resistance, so you see the asterisk next to the support and resistance levels, that just denotes that it's very important, okay? All right, let's go over to the peso. Kevin asked, can you show your dollar chart again? Sure. Here. There you go. Take a picture. Take a picture, it'll last longer. Remember when girls used to say that? As you were gawking at girls when you were in junior high school? Take a picture, it'll last longer. I'm just kidding. That was such an 80s thing to say, isn't it? Can you imagine girls saying that nowadays? I don't think they say that nowadays. Well, all the girls that I gawk at anyway. Just kidding. Okay, so here's the peso. So this is the daily chart. We have obviously this is key support, which makes it really important, because that makes this support very important now, because you have that upsloping trend line really coming into play. All right, our ranges are still the same with the peso because we have 38% retracement, which is right here, 38% retracement, which has held us as resistance. Trend line support is really important. So that's at 1633 and 1670. So $16.33, $16.70. We're in a range, okay? Norwegian krona. Another day, another strong Norwegian krona. I mean, look at this thing, just ripped out of, just craziness, right? Key resistance comes in at 860. I have to write that down because, obviously, if we break 860, it's the U.S. dollar Norwegian krona is gone. It's gonna rally. Okay, this thing has been unstoppable. With crude oil as weak as it is, if we break above 860, it's gone. So I have to write it down, especially if the dollar gets a bump today. Okay, 8.6000. key level of resistance for the Norwegian krona. Now, support, I would say it's right here. Resistance, support, stayed, resistance, tagged it, broke, retested, support. That's really important on the way down. So that's going to be 832. 8.32. Okay. We're in a range, but we're close to breaking out again. Let's go over to the US dollar Swedish krona, and US dollar Swedish krona. We broke that downtrend line. There was data out today. I didn't look. Hold on. What came out today out of Sweden? There was news. Oh, the rate decision. They left rates unchanged. Okay, that's what they did. They left rates unchanged. So Swedish krona actually hit 856. Okay, so what's important about this 855 level? Okay, let's talk about this for a second. First of all, anybody who's trading the Swedish krona right now, they're shorting with their stops above there. That's the natural trade. Okay, the natural trade is shorted it here, stops above 88.56 basically. So let's go US dollars, Swedish krona, because they had their rate decision, resistance 8. Hold on. 8.56. Okay, 8.56. That's key resistance now. Okay, we are in a range here. Now, and that's important because, like, let's just say, for argument's sake, let's say that the Fed is extremely hawkish, like the statement's hawkish. We're like, holy crap, you know, it looks like they're going to hike in December. Let's just say we walk away from today with that attitude. Well, the US dollar Swedish krona could very easily just reverse, take out all the stops above those highs if the dollar rallies. Then it's going to get a nice little boost. On any dip, though, we should find support right down here. So any dip back down here. A lot of support through here. Okay, and that comes in at 827. Okay, it looks like, you know, the good news is we have a lot of currencies on our bias chart. So your bias chart is now complete. Okay, so you guys take a picture of that. Now you have all that information in front of you. It's great information to have ahead from the FOMC today, because I will not be with you during the FOMC decision today. I will reiterate, I will not be with you during the FOMC decision today. I have a conference call right at this damn decision time, so I will not be able to jump on the broadcast with you guys like I normally do. Okay, so just you know, make sure you have all that information written down. Okay, let's go into questions. It's question time. Going into the way back.